Good afternoon, everyone, and welcome to our Canadian Multi-Res panel. Today, we have the privilege to have with us Mr. Philip Fraser, CEO of Killam Apartment, Sam Kolias, CEO of Boardwalk REIT, Bradley Cutsey, CEO of InterRent REIT, and Mark Kenny, CEO of Canadian Apartment Properties REIT. So I want to thank the four of you for being with us this afternoon. I want to start with a totally unfair question. I want to tackle the question about the federal government. And you know me, so you knew that I would ask this question. Let's call it the federal government overhang or the perceptions relating to, I guess, miscommunication between all parties. Mark, it looks like you took kind of a leading role there. Could you explain what are your views on that very subject? And is it fair to say that most of the pressure under which the sector is today relates to those perceptions in regards to what the federal government could do going forward?
I wish it was just in terms of the overhang and pressures for all of us. I wish it was as easy to say it was one issue. That was the good old days when you had a bad quarter, you could understand. But I think that some of this went through Ontario election pressure, followed by federal taxation discussion, followed by inflation discussion, followed by when the market's this beat up and bond yields are going up, is it just a better alternative to own a different instrument? This is all completely detached from rising apartment values. So you've got apartment stocks, with all these suspicions of which the private market price is in none of it. So that's really, really important, I think, because at the end of the day, we're hard asset investments, all of us. And the market is not seeing what the capital markets are seeing. On the federal issue, we are behind in terms of education. Media has really grasped onto bad small private landlord behavior and blamed it on big business. This is a new Canadian narrative, as big as bad, and sadly, a lot of the things that were misunderstood in the media that have been cast on this are just absolutely the opposite is true. I could get into our ESG programs and talk about all the good that all of Canadian apartment REITs do. And that's great. On the affordability front, which is really the Canadian housing story, is affordability. My friend Phil Fraser was quick to point out that between all of us together, we're 121,000 apartments in this country. We're a micro sliver of the overall rental sector, and this is unique to apartments. So it's an education process, but at the end of the day, we all have incredible policy suggestions, and I think that if government embraces practical solution, then this is just an opportunity in time where Canada will be better for this problem that we've had to face. But I'm optimistic.
Mm-hmm. So what would be your kind of timeline, or where do you think we're heading for the next 6 to 12 months on that subject?
Well, on this subject, I think it's going to be, sadly, it'll be fuzzy for a while. REITs, apartment REITs were taken out of the budget sort of wording. It was replaced with corporates, which doesn't make it much better. But in terms of the direct REIT, apartment REIT discussion, I don't know where it stands. I don't know when we'll get clarity on that, quite frankly. Hopefully each budget will know. Mm-hmm. In terms of taxation considerations for apartment owners, like we all know logically, this is coming at the worst possible time. Like you don't tax the sector that desperately needs supply. That's not how to attract investment. Investment, and I'll let the others talk. I can go on and on, but there's never been a bigger wall of capital for housing. Institutional money is all on housing investment, where there's a clear environment and a clear path of what the playing field is. So, we can get the playing field clear. We have the ability in Canada to access never before seen amounts of capital. But investors want clarity.
Bradley, I remember on your Q1 call, Michael, was clear on the fact that he was working very hard on communication with all governmental agencies. What are your views today on the subject?
Yeah, we share Mark's views, and I'm pretty sure I'm not speaking for Phil or Sam either, but I think we're all in alignment on this view, and it really comes down to kind of economics 101. We've got a great country. We've never been more attractive, in my opinion, for immigration and newcomers to come to Canada. And I think as a whole, every province and every constituent wants newcomers to come to Canada because that's how we grow. However, we have a fundamental issue when it comes to supply, and we don't have enough existing housing to supply those newcomers, and it's a real supply demand imbalance. Fortunately, here in Ontario, I do believe a piece of the puzzle got solved with the PC government being reelected. I think they've spent a lot of work and whatnot understanding that it is a supply issue. So I think what we have to do is leverage some of that work and work as an industry, because quite honestly, Fred, I don't think we've done a very good job as industry participants being proactive in educating the three different levels of government, being federal, provincial, and municipal. And provincial, they regulate the housing policies. Municipal can actually affect it, and federal, through maybe financing programs and whatnot, can play a role. I think it's up to us now as industry participants to help educate all three levels and how we're going to be part of that solution. And to Mark's point, it's ideas of taxation that are coming at times where interest rates and inflation costs are escalating at historically never seen before at the rate of change in these. So that's good enough reason to kind of pause and deliver new supplies. And then when you start to say, hey, we're going to change the way the rule book, the way the game is played, adds even more uncertainty and creates more uncertainty, which, as you know, Fred, being in finance, that's called volatility, and volatility equals risk. And all of a sudden I need greater returns to compensate me for that risk. And I think it's just really up to us to kind of explain, to Mark's point, it's not about the taxation. It's about how can the private sector bring the know-how how to deliver responsible housing and bring our private dollars, because there is capital that wants to invest in the industry, and how we can work with all three levels of government so that it can be a win-win for everybody involved. And I really think that's what it's about. And to be honest, I don't think this is about taxation dollars for the federal government. I think it's more about housing has taken a national spotlight as an issue, and they want to address it. And I think it's up to us to help educate them how we can help them address that. And I'm too, like Mark, I truly believe, I'm optimistic. I think there's a lot of smart industry participants, and not just the REITs, pension funds, life cos that will get involved. And we're going to come out and we're going to see a lot of building, but we better bring in immigration that can help us build that housing. I'll be quiet there and let maybe Sam or Phil.
But Mark and Brad, just to be sure I understand you guys well, it doesn't seem like you have visibility on a short term or even a mid-term solution in that educational process. Is that fair to say?
Well, I would just say that we're proactively, all of us, putting out as much education to dispel myths as we can. And that's step one. I would say the government has been, receptive and welcoming of solutions. That's been all very positive. I think the challenge here is that we've got to make up ground that we didn't know we'd lost. Like, there was this whole belief that somehow we were responsible for this problem, and that takes time to unwind. And in the world of politics, they need to be able to explain that problem, that misconception, and that, I think, what we have going for us and we've all talked about this from the beginning, is ESG is a big, big thing. There's supply and there's ESG. And the proof is in our behavior. And it's a matter of broadcasting our behavior, not like saying, trust us, we're the good guys, like actually putting out there the good behavior and helping government understand that we do want to be part of supply, and really just education that we're not big. We are for the average Joe, but we're not controlling this Canadian housing market by any stretch. I'll throw out a fact, like, cap rate tenants last 3 years have averaged a 1.1% rent increase, all of them coast to coast. If you're an existing customer, 1.1%. Think of the world we're in. Like this is remarkable, the affordability proposition that people are getting. So I don't know. It's about dispelling myths and providing solutions at the end of the day.
Mm-hmm. And Philip, you are a part of the supply solution, owning one of the best Canadian development platform. What are your views on that subject today?
Well, just to answer the question that you just posed, yes, and I would say that we've been part of that solution for the last 12 years, developing apartments on our own balance sheet in projects. And some of them have been affordable, or we've purchased recently built affordable projects. So we are definitely part of the solution. But to highlight and add a little bit more color to what Brad and Mark said, I mean, the way I look at it, housing in general, and the last, I bet you it's been 50 to 60 years, the federal government and their involvement in housing has promoted single family home ownership. So today in the country, we've got about 68% of all households live in a owned home. So the other part of that is the other remaining 32%, say, that includes the rental stock. It would include long-term care facilities. It would include people housed in prisons, and it doesn't include First Nation communities. So, and you can sort of boil it down from 38 million people, the number of households that live in a single family home that really aren't too concerned relative to other people, that what does the rental pool look like? And then we get into about 4.5 million rental units. And as Mark said, the six of us combined, the public traded REITs, own collectively in Canada 122,000 units, 3%. And the reason why we have become a target, especially from the sort of the acorns and the left-leaning activists, is because everything we do is out there in terms of the public domain. They can see what we charge for rents, our financial statements every 90 days. So somehow that kind of discussion has that we control rents, and we're the reason why rents are increasing. And that's another aspect that we don't talk enough about, or concept, because the majority of the larger provinces, and all rent control is at the provincial level, have rent control in one form or another. Ontario, Quebec, BC. So when you start with that, just for like Ontario, if the rent that we were allowed to increase was 1% last year, that's at least 80% of all people, that's all they receive in Ontario. And so when they say rents are rising fast, what they don't really want to sort of explain is they were vacant units. And yes, they might be a market rent today because the rest of the building has been suppressed relative to where market rents are. And it also includes all the new supply that gets built at a higher price, and that is at a higher dollar per month rent. And it's that combination that all of a sudden people think rents are going up. Well, it's just market. So, I mean, we don't really tell that story enough, I think, to basically say, and the perfect example is in a market where Mark is and I am, that it's PEI. There's rent control on occupied units and vacant units. And when you see reports out there that rents went up 8.2%, well, That's only because there's been new supply and it's been at a higher rent, because it's not on the people that live in the units. So that in itself basically says, we're not the problem. We don't create, we're not the one pushing up the rents. It's just market. And a lot of that has to do to the input costs. It has to do, there's a relationship between single family homes and basically replacement costs on new apartments. And everything has been going up. And now we're in a period of high inflation. And there's a lot of pressure on our expenses and on the replacement side of new stock.
Absolutely. Sam, are you totally immune against these discussions out west?
No, the current discussion and papers that our leaders are looking at are really reports that want to find somebody to blame. And what these reports are missing, and what we're here to share with everybody, is it's about policy. For decades and decades, rent control is the policy, is to blame for making housing more expensive. And the facts are quite clear. The most affordable rents in the country are in Alberta and Saskatchewan, where there are no rent controls. It's very clear. Our rents are approximately 50% of these other provinces that are rent controlled. So looking at where there are solutions, where are the most affordable housing in Canada? That's the question that has to be asked. And those are the questions we're bringing answers to, because we're clearly an example where rent controls are actually hurting affordability. And Alberta and Saskatchewan are now the clear examples of how no rent control actually helps and improves affordability. So number one, less regulation. Good news, our federal government recognized how less regulation and provided in the last budget $4 billion on municipalities that can show a reduction in regulation and a speed and time improvement to approve new supply. That's good news. Secondly, our electoral populace in Ontario voted for a party that did not have as a policy, like the Liberal Ontarios, to increase rent control. That's good news, because voters are seeing that rent controls hurt affordability. Then the clear example, and we have to go back into the 40s and 50s with the limited dividend program and the MURB, the multi-unit residential program, and the New York example of Section 8 housing, where less taxation increases affordability. That's a clear example over the last several decades that produces more affordable housing. Then the third example is less cost of capital. We have to give credit to the federal government for continuously supporting Canada Mortgage and Housing Corporation, where all of us on this panel are benefiting significantly with the lowest access of capital, next to free cash flow, of mortgage capital that's secured and backed by the government of Canada, providing us with the least cost of capital to allow us to continue to provide affordable housing for Canadians. And then fourthly, the big categories are rent supplements, where no Canadian's gonna give comfort, or we can't give comfort to any Canadians right now that are struggling to pay for their rent. So right now, with rent supplement programs that our federal government has provided over the last several years and has only asked our provincial governments to match. And Alberta is a good example where our Alberta government, after a special panel and review that we personally sat on, agreed rent supports will help people be in places that they're currently in, or to find a place with rent supports. So those four main policies and ways to increase affordable housing work. And this is what is going to help. And this is what we believe and are working very well together as a group, along with RealPAC and our governments, to share what works and what clearly policies that can be put together going forward that'll improve affordability. So we're very, very confident that the information that actually works, that we're sharing, will be a part of the policy that we're going to see in the future.
That's great color, Sam. Thank you for that. Back to you, Mark, and the supply question. So correct me if I'm wrong, but looking at the student permits that were issued last year and immigration that's picking up a little bit, looks like the second half of the year, looks like cautiously could be pretty strong, and even the first half of 2023. How do you reconciliate the demand with the supply side of the equation in the current context in Canada and in your markets, I guess?
Well, the business fundamentals are unbelievable, which isn't terribly helpful given all the issues that we're dealing with, because again, we are not able to change the pricing environment because we're a micro sliver. But at the end of the day, Canada is suffering from a number of things. If you go back to like the first quarter of 2020, market was rocket fuel. Okay. During that time, what happened during COVID? Well, kids went home. That's what caused the weakness. Not students, but under 30s went home. Canadian kids live within an hour of mom and dad typically, and that's why they were quick to give up their leases. The biggest sector that was hurt wasn't actually our sector of rental. It was the condominium sector of rental in places like Toronto and Vancouver, and to a certain extent Montreal. And what happened was those investor units, which have been the supply of Canada for the last decade, a lot of those were sold into end user hands. So the rental universe has actually gotten smaller in the last 3 years. Okay. You've got these immigration targets of 400,000 people. You've got the under 30s returning back to independent living with wallets full of cash because they saved during COVID. And the permits mean nothing because the permits are the work of the last 7 years. And most that I talk to are quite cautious in this inflationary environment to proceed with development. Okay.
Yep.
You've got a smaller supply of rental accommodation. You've got demand pressures that have been really built up for 3 years and getting worse, not worse, but getting exacerbated by immigration. And you've got an uncertain supply development pipeline because of today's inflationary costs. Now, the next problem right behind that is this incredibly unstable environment that government's created for housing investment. So this is the crisis that we have. And, we've sadly all grown up. I think everyone in this group has grown up trying to avoid the media, trying to avoid government, just doing our jobs. And it was really not a win. We are really front facing now with the problem, because there is no other way for our businesses to stay healthy than to be front facing.
Well, just in terms of development activity for Cap REIT per se, how do you view that segment of the business in the current context? What would be like over the next call in that 12 to 24? Yeah, you've been one of the most conservative REITs out there when it was when it was time to discuss new supply. Where do you stand today? Are you even more conservative?
Well, no, I love this question. You've got to ask yourself, Cap REIT by float is the largest REIT in Canada, period, of all REITs. Okay. And yet when you look at our development ambitions, they've been modest to none. And you got to say, well, why is that? Well, because we were in the business of buying buildings at 50% of replacement cost, investing capital and raising capital to match new great opportunities. And when Canada became challenged, we went to Europe and where the opportunities were even more incredible. So our organization was geared to that formula. Our organization has changed tremendously in the last couple of years. Now we have this enormous land bank, that I have to repatriate value to unit holders on. But really, back to the solution again, and I'm a bit of an evangelist with this, but the whole manufactured home sector, where Killam and CAPREIT are Canadian leaders in, is part of the first step of affordable home ownership in this country. And we're really hopeful that government will embrace that. And in that regard, you will see CAPREIT pivot all capital towards the development of those communities where they'll allow us to do it. Okay, so that's number one. Number two, on the supply side, and we've said this to government, you know, we've been public about our 10,000 units of market viable. The reality is we know it's 30,000 units of potential use minimum. And to that end, we're offering it up to government and saying, look, we want to be part of the solution, and we want to put our land to work and work with us, and maybe we can find a solution together. But we all have this land advantage in our legacy assets that we're all open-minded to working with government on if there's good solutions there. So, you know, that's a bit of a long-winded answer, but that's our development is not on pause. It's actually quite ready to activate in a very big way if we can clear the path of regulation and we can clear the path of investor worry.
Yeah, that's a great answer, Mark. And Bradley, you're leading a REIT which was also very conservative on the development front, despite the quality of your development pipe. Do you agree that the second half looks pretty good in terms of second half of the year looks pretty good in terms of demand? You have a little bit more economic beta to it with your urban core portfolio, notably in Montreal and elsewhere. And second, how do you view new supply in your markets and within the InterRent?
Yeah, I think during the pandemic, we definitely saw a tale of two cities, and our Montreal and Ottawa portfolio and Vancouver portfolio are very urban, majority urban, where our GTHA is a little more bedroom community. And I think throughout the pandemic, we saw the GTHA really perform. And I agree with Mark's comments, especially in that region. A lot of the young professionals were moving back home with their parents. I think in urban cores such as Montreal, it is very much a foreign student-driven market. And for whatever reason, they've started to come back, but not to the same degree that we've seen in BC and Southwestern Ontario. And you can even see that in the study permits. They're up significantly in Ontario and BC. And I think some of that might be explained that Quebec took a little longer to come out and was a little more restrictive during COVID, and it's one of the last provinces to really kind of come freely out and get back to a more normalization. So all else equal, I think as a foreign student, you kind of said Concordia or McMaster. I'm going to go McMaster because there's less risk to me. It'll be, I think, a little more of a normalized experience, at least anecdotally. That's what I think, but extremely strong. Business hasn't been better and hasn't been tighter. One of the unfortunate issues that we're all facing as publicly listed REITs, and just as any developer or levered buyer, developer of the real estate asset class or capital allocator, our debt costs have significantly increased. Our equity costs have too. So it's going to make it even harder to be able to reinvest in the existing housing stock and to participate in new development, not to mention the inflation costs. So when Mark talks about CAPREIT was built on buying on replacement costs, so true. And to this day, all of our portfolios you cannot replace them if you were to go build them new. So there's an education process on educating people that housing costs money, and to maintain housing, it costs real dollars. And you've got to balance that and judge that. And I can speak for my peers. All of us on this panel today, we offer nice, safe, secure homes. And I'm proud of that. Here at InterRent, we build communities, Fred, and we're proud of the fact that if you live in one of our communities, we're providing you with a home that you can be proud of. And I think as Canadians, we feel it's our right to be able to own a home. And that's one of the wonderful things about Canada. But you go anywhere else in the world, to be able to rent in one of our communities on this panel, you'd be pretty proud of it. And it's not a shameful thing. And you put that in the context, we are the affordable option, regardless of what level of rent. And when you take the fact that our very government is increasing the cost, which fine, it has to work its way through the financial system, that's coming at the expense of home ownership. And that just makes rents that much more affordable. But if we can't deliver new supply, we're not going to be able to fix the imbalance, and rents just have to keep on increasing at a greater pace. Back to Sam's point, Alberta has proven it works. Rents increase, people understand the playbook. They deliver new supply, rents come down a little, supply equals out until there's another imbalance. People will come in, the private sector will come and bring the capital. So we know it works. We just got to get more governments to think that, how do we make it easier and incentivize capital to come work with us and deliver it so we can relieve. But unfortunately, and I know renters or people looking for housing formation doesn't want to hear it. Home ownership costs have gone up. Rents are going to continue to go up until we figure out supply. And it really, unfortunately, is that simple. So the other thing I would say too, a lot of people aren't talking about, if you looked at the equation, let's use Ontario as an example. If you looked at the equation that they're going to go to use to figure out next year's guideline increase, we'd be double to 3 times what the cap is allowed. Meaning, at some point, the government thought this is reasonable, take these bits of inflation and should be able to, as a landlord, pass that on to the resident, because that's the responsible thing to do, because we want to reinvest in the building to provide safe and secure housing. But they cap it at 2.5%. Where inflation is today, what is actually costing us to provide those services is going to be, I think you did the calculation today, it's 5, maybe 6%. And that doesn't really ever get picked up either. The back to Mark's point is the existing resident is subsidizing the new resident in. And there's no other way to do that right now. So if you're only going to charge 1.5, and when an inflationary environment is 7%, how does capital come and reinvest in the housing stock? The only way you can do it is if somebody's willing to pay market rent in that vacant unit to incentivize the reinvestment. Otherwise, the stock continues to get depleted. But maybe I'll leave it there. I'm not sure if that answered the question.
But just to summarize Mark and Bradley's comment, if I understand you guys well, you're good to go on development. It's just that, first of all, obviously, I mean, construction costs is one problem, and the second problem is you want to be sure you understand, or you have more visibility on I guess this discussion on regulation before getting more aggressive in your programs. Is that
I'd only make the clarity point that we want there to be rental. That's the model of the REIT. But if there's not rental, there's condo, and that helps supply. It just doesn't help what the market needs. But we all have land that doesn't have to be rental. It can be either or. So it's just deciding, for cap rate unit holders and REIT unit holders across our companies, what's the best investment. Mm-hmm. And condo still pans out extremely well. We just want there to be be part of the rental supply solution. But in terms of value preservation, the value is 100% there for all of us.
Mm-hmm. Got it.
It doesn't have to be rental. That's not going to stop the extraction of value.
And for us, Fred, we're still very excited about the development side of it. I think rents will continue to perform a thing, but it's going to really come down to how well capitalized you are. I do agree with the earlier comments being made that I think a lot of development's going to get shelved because they're not in the same situation. So for the right site that's located to existing transportation, new supply has to come. It just does. We're gonna participate in it, but we're gonna be extremely cognizant of where our cost of capital has gone, and we're gonna be extremely cognizant of where inflation costs has gone on construction, and we're gonna have to weigh those with where we think rents are gonna go in the near term, and it's becoming more challenging for sure.
Absolutely, 100%. Phil, back to you now. Again, you're I guess arguably a little bit more active on the development side, and you have that very high quality pipe as well.
Yeah.
At the same time, it looks like you're now exposed to new rent controls regulation across some of your markets too. And how do you feel about first demand for second half this year, and second, how do you feel about your current development pipeline?
Okay, thanks. I'd just like to sort of touch on one thing Mark said there a few minutes ago. And he was basically sort of exploring the concept that a lot of the condo rental market has disappeared because people ended up with, in terms of the ownership of those units. The other point I would make on that line is that we never really discussed the impact of Airbnbs and all those units that are being rented out on a daily basis. And again, if that industry didn't exist, which it didn't 10, 15 years ago, all that stock would have been investment properties that they would be looking for a tenant on a yearly basis. And provinces like PEI that actually do have a very strong summer vacation tourist business, there's been a lot of the new supply in existing that has basically gone to Airbnb because the rates are so much higher that in the sort of short 10 to 12 week season, they can make more money than you could make on a market rent. And I think that is actually all over the country. And that's another thing, especially when they're not really tied to a landlord-tenant act. There's not a lot of the HST and everything else. And that's a part that the government's going to have to look at as well. Mm-hmm. Back to your questions. Second half, the demand is extremely strong for our product. Every one of our markets, it's probably been the strongest it's ever been. On the development side, this has been a big year for us where we have just finished and opened 3 properties, 2 in Ottawa and 1 in Mississauga. So we're in the lease up of about 500 brand new units in those 3 properties. We've got 2 more that we've been working on for the last couple of years, where all the sort of the pricing and the costs have been fixed 2 years ago at that price level. And we're hoping to finish them by the end of the year. So that's a pretty big year for us. It's about $240 million of new construction that, whether it's finished in lease up phase or should be almost completely done by the end of the year. Now, my sort of where I am today on basically starting the next wave of developments, one is that I can honestly say the process of getting the final permit to start construction is not becoming any easier. If anything, it's getting harder. And so, even if the federal government says, look, Mr. Municipality, here's a bunch of money, speed up all the permitting, I'm in the camp of, I'll prove it to me, show it to me first, because it is extremely complicated to get anything that is through the processing process and being able to build. So we were lucky. We started a project in Waterloo. It was in July of 2018, and it was literally last week we finally got the building permit to start. Mm-hmm. And I just don't see it getting any faster anytime soon, which is too bad. But the good news is there's lots of developers in every market, and it takes everybody to create the supply that we need. My concern or hesitation is that I think right now, where the cost of new development and the pressure on it, that there's been certain elements of the development, sort of overall development program, the pricing has just got ahead of itself a little bit too much. And I think the biggest reason is the lack of labor. And all these sort of contracts or sort of disciplines are just very stretched right now for the labor side of it. And it's just too easy to continue to increase their price and promise that they'll be there and do it. And I think it might take a little bit of a cooling off on some of these sort of markets. Alberta, again, is an exception. There's still lots of labor out there, and the pricing is the best that we see across the country. But in some of the other markets, it's just getting a little bit tight. Halifax would be one, and obviously the Kitchener, Waterloo, and GTA is very tight for labor. So if we can pause for a few months to see if some of these guys finish up their current projects and if pricing will come down a bit, then we'd be really keen to continue to grow.
That's great color, Phil, and that's interesting. We were discussing that right before the panel. Sam, you're enjoying, like, it looks like the province can pass along some of that inflation, and you're enjoying within your markets quite strong rental rate increases. How do you feel about the new supply in your markets today?
We don't have any plans to build anything new in Alberta. Our rents are still far below economic levels for new supply. The demand we're seeing is far outpacing the current supply. And with rents about 50% the levels as we discussed in other major centers, and the affordability where our average income is approximately 20% of rental levels, and the lack of rent regulation, there clearly is a opportunity for us to pass along these inflationary increases to our residents because of the affordability. And also, Statistics Canada just released the most recent report, and in Canada there were 40,000 jobs created. 27,500 of those jobs were created in Alberta. Alberta is now creating over 68% of all jobs in Canada. Our economic engine is better than it's ever been. We have the most full-time employment that we've ever had. Our population continues to grow, and the supply and demand has never ever looked better in our province. And we've got a long runway of sustainable growth given where our rents are relative to the average income of our residents. And so we see the biggest opportunity in our existing communities and in our largest market, Alberta.
Wow, what a great panel that was. And it's all the time we have, 2 minutes until the end. So I wish to thank you, all four of you. That was amazing. And for everybody else, please stick around for our next panel in 5 minutes on foreign multi-residential. And thanks again, guys.
Thank you.
Thanks, Fred.
Thank you.